Okay, today is November 23rd, 2013. Let's take a look at the market here. First of all, let's take a look at this chart here. This chart I posted on my blog a few times. And you can see the Dow Jones Industrial is up here. And we can see all these, the divergence still continue. We have a new high here. All these are where there was pointing the day that these indexes hit the new high. So you can see that the Dow Jones hit a new high on Friday. So did the S&P and also the Russell 2000. But if you look at the Dow Jones Transportation, did not hit a new high. Neither did the nasdaq 100. Now, although the nasdaq 100 came close, I believe it's only the previous high was 3422.58. So we're only talking about 6 cents off the previous high. But regardless, it's basically kind of give you the picture of continue the divergence between the Dow Jones Industrial and the other market indicator. And in addition to that, you also seen this chart before. It's basically the couple of the market breadth indicator, the advanced decline. I'm basically looking at the New York Stock Exchange, and here's the Dow Jones Industrial. You can see that here's the new high on last Friday. But again, you look at the the advanced decline line. These are cumulative, so it's a net positive or negative, that get add to the cumulative sum. So add or subtract from it. So you can see that as the market continue to hit new higher, especially the Dow Jones, the advanced decline line is failed to get to a higher high. Similarly, also you look at the net new high, new low. This is the daily net new high, new low. So you can see that the new high, new low is also seems to be on a deterioration here. Although it's come up on a day that it or the market that makes make a new high, but it just not getting enough participation or enough of a market strength, internal strength, to actually get to the previous peak. And what we really like to see is to get it back up here, because that's basically what we want to see. Similarly for the advanced decline line. Okay, so essentially, this is the market breadth indicator. And if we take a look at the some of the chart here, let's go and take a look at the Dow Jones Industrial, the price chart. Here's the weekly chart, and again going back to to the 2009 time frame, you can see that we're basically just showing a trend line here and establish a little price channel, and you can see that it's getting close to getting up to this upper trend line here. And also, in addition to that, we also have the Fibonacci retracement. This is a long-term Fibonacci retracement, big swing. So it's not these daily, weekly swing, for the short-term, swing trade or intraday trade. So right now, if we are looking at this, and if I just kind of bring it down, you can see that the next level is somewhere around the 16,659 or so you could say 16,660, and we're talking about 16,005 last week on one of the video. We're talking about this level here. So certainly you could see that been what 2, 4, 6, 7, I believe it's 7 consecutive weeks that been up on the Dow Jones Industrial. So wouldn't be surprised to see next week get a little bit of a consolidation, and since also it's a short week, but also it could be a thin light trading week also, and that's where we normally could get some volatility there, and just doesn't take too much to move the price up and down, and so we might see a little bit of a big move and spike up or something. So anything could happen. You just have to be aware of it. The market is kind of extended, although the market will always do what it will going to do, and there's the only things that we could do is to keep an eye on it to see where it's going to lead us, and trade accordingly. And if we also take a look at on the daily, if we just quickly take a look at the daily chart on that, you see that if we looking at this this move up here, you can see that it is kind of spiking up a little bit, but again, it's essentially, if we have a trend line here, let's see were talking about this particular, oops, this particular channel here at one time. So you can see that it's kind of broken out here, right? And in addition to that, we could also kind of take a look at the the Fibonacci retracement on a shorter time frame. And let me take this out here. Okay, and let me get the Fibonacci tool, and if we just do this swing here, right, and swing it from here, so essentially we swing it from here to there, and if we come bring it down, and you can see that this level here somewhere around 16,500, right? So, and then if we go and take a look at the transportation, let's see, we go get the transportation, and let's take a look at the weekly first. And again, we basically join in the price channel using the 2009 low. You can see that it is a little bit of a distance from the upper trend line here. So we might see somewhere around the 7,400, or it could even kind of hug this trend line all the way up to 75. Who knows? But right now, it certainly has surpassed this 141 extension. You see that 141 extension about 7,086. Using this particular Fibonacci retracement, this particular swing point here, right? Came down, got close to the 50% retracement, hover around the 78.6, and then broke out, came up, the 127, pulled back a little bit, and then went back up, and now it's getting up to the 141. So maybe we'll get a little consolidation and then move up here to get to the 7,500. And that also could maybe give us a confirmation on the Dow theory with the Dow Jones Industrial. But certainly, again, these indices is way extended, and we just have to apply caution. Definitely, you don't want to go and short this market. Right now, this market momentum is still on the upside. Until we get a confirmation that they have reverse trend, we shouldn't be thinking about shorting this market. If you don't trust the upside, just go, stand on the sideline and wait, rather than try to be brave and go anticipate the market turning downward and try to short it. Okay. So, and also on the S&P 500, the S&P 500 on a weekly chart again, this kind of got a little bit outside of this boundary here on this channel, right? And it is bumping up against this 141 extension of it, getting close to that 1812. 1812.9, so just have to be careful on that. And if we go back and take a look at the daily, take a closer look at the daily, right? So if even if we let's say we do a little bit of a Fibonacci retracement here, let's say at this point here, right, we still kind of see that there is some, let me bring this down, at this point here. Okay, so that 127, so possible level next week. And then if we go and take a look at the NASDAQ 100, and let me go and switch that to the weekly, and then we could take a look at the weekly first. Okay. And again, we see that back in 2009, the price channel that we established right now is still a little bit away from the upper trend line, but it's getting close. And also the other thing is we are looking at this Fibonacci retracement here, right? This particular swing point, right? And essentially it got above this 161, so it is a bit of an extended. And if we move the Fibonacci extension, let's say we use this particular swing point now, right? This right here to this point. And we could also see that it too is kind of extended to that 161. Okay, so it is getting a little bit close to some major confluence of resistance there. Okay, depending on these fib trader, which level that they're using. Using the swing or the swing, the big one or this intermediate one, and of course there's a smaller one, but those are for the shorter term. But again, you look at this, it's getting close to that, above this 161, and also here it's kind of exceeded the 161 already. Okay. And then we look at the Russell 2000. Let's get the Russell 2000 on, and on the weekly, uh, again, we're going to reference back to the March 2009 low with the price channel, and you can see that it is touching up the price channel here, and also exceeded that 141 extension here. Okay, right, because we have this 141 1088.93. Essentially, is this particular swing here on this long term. So it came down to 50% point, came up kind of tested the 78.6, tried to break out, came back down again, and it finally broke through. Right, it came up here, tested a little bit of a resistance at 127, came back and retested, then it broke through. So we'll probably see a little bit of a retest here as well. So we gotta be careful on that. And if we take a look at the daily, maybe we could project a little bit of a possible daily price level here. So if we just make a little attempt of using this as a fifth retracement, right? So we're talking about maybe 1147, 1148 possibility. Next level to keep an eye on. This would be the 127 extension on that. So that's a quick look of the market. Hopefully you're enjoying the weekend, and next week is Thanksgiving week, and some of you folks probably will be taking off and won't be trading. So let me say happy Thanksgiving to you and your family ahead of time. Okay, enjoy your weekend.